Hello everyone, Charles Moon with Prosper Trading Academy, bringing you another little tidbit, another little market commentary piece. I'm going to talk about two particular stocks that I rarely talk about, but I see great upside opportunity. Maybe I'll include a third. What's the common denominator between all three? Well, outside of the first letter, nothing. They're really spread out in terms of secular stocks that we're going to look at, and I'll just kind of go over from a technical standpoint where I like the upside here on all these names. Now, this stock that I'm looking at currently right now is called Dominion Energy, D, tied in with, obviously we're talking the energy sector, but what you've noticed here is that they've made a really nice run up after a pretty sustained and long trending move to the downside, and they've just kind of shut down and gone sideways. Oops. Let's see if I can draw that proper. Gone down sideways. So when I see this, when I see stocks consolidating like this, I always think, well, this is either going to be a great opportunity for traders that like to trade range-bound moves, most notably when stocks are consolidating. But really, I see opportunity. I see opportunity to the upside, and this is where I see the opportunity and why I'm speculating upside as opposed to the downside. We know where our resistance is. This is pretty clear-cut ceiling right in this particular price range. Let's just say 72.50. That little white line right there, that's basically the lid on the pot that's preventing the stock from moving up. Well, we're starting to see very bullish signs of the stock making this move up, and most notably is the most recent reaction at this little orange line, which is called the 50-day simple moving average. If you've noticed, it also was getting squeezed and finding resistance at this teal blue line until it finally got above, and now it's starting to find technical support at that teal blue line. That is the 200-day simple moving average. So it's referencing two key specific technical indicators that people use both for the short-term, long-term sentiment, and it's reacting to the upside off of these levels, meaning it's showing bullish behavior. If it closes and opens outside 72.50, I'm calling it a breakout. I believe that breakout will be at the minimum to 75, but you should be targeting between 75 and 78, and that in turn can draw you to an 8 to 10% run. And I believe that if it does happen to break out, it won't take long, folks. It could happen in less than a week. So right now, I wouldn't want to be a buyer. I can't speculate it's going to break resistance when previous history is saying it's not. But this has to be on your watch list and your radar in the short term for that opportunity. Breakout plays are good opportunities to get a lot of yield in a very short period of time, so keep that on your radar. Next up, we're going to go to DNKN, Dunkin' Brands. If you've had a Dunkin' donut, you've dabbled in the Dunkin' Brands. Now, this was the consolidation period with that breakout, right? That's what I was referencing here on Dominion. Well, we got that in Dunkin' Brands already, and now it's pulled back. But if you notice where these old highs were, especially where that old double top was, that's exactly where they're finding support. That, in turn, is a very bullish sign. Again, it's above the 50-day moving average, that orange line right there, so it's showing short-term strength to the upside, and most notably now you have a additional layer of support for any fallout in between. The truth of the matter is the trend line here off of their most recent swing low has been pretty significant, and if you've noticed the reaction of the stock every time it's gone towards that 50 period moving average, it's been up. I love the upside. This is more of a swing play, short-term opportunity. You'd probably be looking to play it somewhere between 73 to 74, up to 77, and from 72 to 71, that would be your downside risk. Once it gets below that level, you're not going to want to be in. Last but not least, DKS. This is a stock that has fallen on hard times. They are well off of their all-time highs. If you notice, we went from Dominion, Dunkin', and now DKS. Reactionary off the 200-day, reactionary immediately off the 50-day. That's exactly where we're approaching. Now they're finding some short-term resistance at the 20 simple moving average, the 20 period simple moving average. That's not a major issue. What I want to see is that it holds above this 36 price. That's exactly where the old highs were, in conjunction with where the 50 period moving average, where they've just recently, and I'll highlight it right here, this bar right here, I can even make it a little bit bigger, this bar right here ended up rejecting as support. So immediate technical support was in play. If it crosses over this price, is making a lower low. It's also getting below the 50-day. I'm not going to want to be a buyer. DKS above 36, I see upside here. Even in the short term, there's a potential for 10% gains. While you're going to have to allocate a little bit more risk, quite honestly, if you want to play it tight, just play it off of that 50. Anything below 35.50, you're probably not going to want to be in. I love the upside in this name. I love the upside in the opportunity of all three names. And that's kind of what I wanted to bring you today. Keep these on your radar, on your watch list. Watch how they perform. If they end up moving up higher, at least now you have an understanding of what to look for as you move forward. But if you want a little bit more in depth, give us a call. Reach out. Ask. I'll be more than happy to talk to you folks. This is going to wrap it up for today's commentary, folks. If you have any follow-up questions, make sure you follow us at Prosper Trading and Prosper Trading Academy on Facebook, on YouTube, and on Twitter. You can follow me, C, the letter C, Moon Trader, on Twitter also. And as I wrap up, I do want to mention that stock and stock options trading does involve a substantial degree of risk. It may not be suitable for all investors. Past performance is not necessarily indicative of future results. Folks, take care and have a great rest of trading week.